Hey, good afternoon, everybody. This is 12-Minute Trading. My name is Doc Severson, and I'm joined here with Dave Lukas. Today is Monday, the 10th of June in 2024. And, we are inches away from the all-time highs, but we got some interesting events coming up this week. We have CPI on Wednesday. We got PPI on Thursday. We have the Fed on Wednesday. We're gonna see some movement between now and Thursday, Friday timeframe this week, and then we'll see. I mean, we've gotten into the summer. I don't know that we're necessarily into the doldrums yet, but Dave, what do you see moving the market from this point forward into this year?
Well, I mean, we've been talking about it for the last few weeks that we expected the summer rally, right? And like I expect it to continue. I think this week is one of those weeks where you got a ton jam-packed news-wise events into the week. But I think CPI is going to come in fairly in line like it's been. If it's off, it's like 0.1 off, So I don't think that's going to change things much. I think the biggest thing this week is going to be Powell's, press release and how he comes off. Is he hawkish or is he dovish? That's really what it comes down to. The market is just like, it's all hope. Hoping for a rate cut. Like all the banks now and everybody that were like, oh, there's going to be a rate cut in July have all pushed back to November and everything. So that's a little bit of a telltale sign because remember, JP Morgan, Bank of America, all these banks, they are the Fed. Okay. They're the board members of the Fed.
Right.
That's what the Fed is, right? It's a cartel of banks. And so they already know, you know what I mean? So it's like, I think it's Powell's job if he wants to come off as hawkish and basically just say, nope, we're not talking rate hikes now, but I think we're going to get more the wishy-washy, dovish Powell. It's data dependent, and we'd like to cut rates, and we can see a path to doing that, but things have to come in line. We're going to hold it to 2%, blah blah blah. Right? That's basically what we're going to get out of them this week. And the market's going to have to pick the direction. I think in the interim, in the short term, it goes higher. I think we see 5,400 this week by the end of the week, maybe early next week. Then maybe we have some malaise. Maybe we don't do that much, right? Because the big news events and all that stuff are over. The split on NVIDIA is over. So that's what has helped drive the markets higher into that. And so the market then kind of stands on its own and maybe grinds. Like we've seen these summer rallies where they just go up and up, kind of like what we saw from October through into February. I don't think we necessarily see that in the summer unless Powell comes out and basically says, yes, we're going to cut rates this year. Markets to the moon, right? So I think that's kind of where we are. It'll depend on that sentiment on, Wednesday, and it'll be the most important Fed meeting of our lives until July in that Fed meeting.
That's true. What did you take? What did you take from Friday's jobs report, where that was well above consensus?
The jobs report, every one of them is revised down. It's really it's a facade. There was a birth death adjustment in that number that accounted for all that. It was some random thing they do. They call it the birth death adjustment, and it means nothing. It has nothing. There's no real jobs around it at all. And so you had that. They were talking about like Mark Tepper was hammering that. So was Charles Payne over the last week. But I think the biggest telltale sign of things is that native-born workers is just going down and down and down. Like it's like almost 1 million native-born workers have lost jobs since Biden's become president. So they're counting illegals, illegal immigrants that come in and do any work as a job. They're counting part-time jobs as a job. So, I mean, I think we see it. I think, the economy continues to kind of, as we talk about the macro underpinning, continues to deteriorate. And we've seen GDP go from 4.9 or, roughly to 3.4 to now 1.3 and so on. So we talked about this, I think, last week is that by the fourth quarter or so, we could be into a recession at that trajectory, right? But the recession won't really hit until 2025. Q4 could be the first quarter of negative growth. We may see that. But yeah, so it'll be what does the Fed do? Do they act before that if they see that happening or not? And historically, as you know, the Fed is always late to the party and they always stay way too long.
Always late to the party.
Yeah. So and the charts are giving us again, you can bring them up. We're in a kind of a consolidation period in the midst of a weekly swing higher, but that weekly swing is coming to an end, right? We are, I think, getting into the low 40s on the energy on the weekly chart, and that's once we get down to that 30 range or so, we're typically exhausted, right? And we have to slow down. So I think we got another 2 to 3% to go higher.
What I see is kind of interesting, because what we're seeing is these fractal consolidations. So we've seen this consolidation on the weekly chart happening for quite some time, and then we're burning that energy off as it goes. And this is also happening on the daily chart. Most recently, in the month of May, we had this consolidation, and now we're starting to see that break out and burn itself off. And so one by one, these time frames are, and this is how you get those, kind of tailing up or parabolic type rallies where they kind of finish off one time frame at a time.
Mm-hmm.
And I guess we should say we've already hit exhaustion on the monthly chart. And so we're sort of coasting into the end of the year, if you will.
Right.
And so a lot of times what you'll see is the very last leg of a rally, and you can see that in just about anything. You can see that back in 2000. You can see that back in 2007. We can see that back here in 2021, the end of 21.
2021 was a great example, especially if you look at like a weekly chart.
All bull markets like this always end on a high mark. And then what happens is, the very first thing that happens is it starts getting very noisy. It does not sell down immediately from the top. So it gets very noisy first. And then if it's going to release, it will do so at that point. So kind of what we're looking at here is the way we're looking at these charts, we're expecting one last fling to the upside. And like you said, Dave, it could be 5,400. I think it may be as high as 6,000.
I was talking about just in the next week. I'm with you. I think we are between, I don't know if we get as far as 6,000, but I could see 56, 5,700. But I think what we have to go through, and I've mentioned this before, is we've got the summer rally, but you can see that weekly chart energy get into an exhaustion period. That's going to take us into, just like it always does, that beginning of August timeframe, where you get, exhausted at that point, and then you've got that kind of corrective action that happens, that volatility comes in as you get into September, right? And you got Jackson Hole, and we'll see what happens at Jackson Hole and all that. And you'll have this kind of, it'll be a wild fall, I think, just because it's an election year and the markets will be moving on. This debate happened and this poll came out, and so you're going to see some manicness. I think we may not go anywhere from like September through October, right? We may have some big swings, but may not go anywhere. And then I think that last parabolic tail happens in November after the election, because the market has certainty, regardless of who wins. I know that sounds crazy, but it brings certainty. Mm-hmm. And even if the future is, not bright according to what the market sees, they'll run that sucker up into the end of the year, get those gains for the year, and then 2025, all bets are off.
Yeah, that's when they rotate that inventory over to retail.
Yep. That's what they'll do. And you see it like in 2021 is a picture perfect example of that. Picture perfect. I don't know if you can blow up 2021 on a weekly chart or even a daily chart to watch that parabolic tail as they ran it up and then just took the retail of the cleaners.
Yeah, let's go over to the S&P. So here's 2021. So we came off
noisy at the top.
We came off of the pandemic and ripped to the bottom, and then we went all the way up until the very end of the year, and then things started getting very noisy.
Look at that last push right through November into December, right. And then it got noisy, and then boom, right?
Yeah. And then this was the key here, because this went all the way up until the end of March. all the way up until the end of March. So look at this. We dropped down, got everybody convinced that things were falling apart, and then we rallied like crazy, almost up to the former highs. And so everybody at this point is saying, bull, let's go for it again. Everybody's good. And then that was a massive bull trap, because what happened right after that was Powell said, I think we're going to be raising rates. I think we're going to continue raising rates. And so that's when the market just completely had a hissy fit. But it was over very quickly.
Well, and traditionally, when the Fed starts lowering rates, the markets sell off. I know everybody's like, we want rate cuts, but traditionally when the Fed starts lowering rates, the market starts selling off, because usually if the Fed has to lower rates, right, or they end up having to do an emergency rate cut, it's because things are not going as well, right? So like right now, to be honest, there is, unless you're really looking at that macro side and stuff, but you look at if you just take the jobs number at face value, you take, the economic numbers at face value, things are pretty good, right? So it's hard to go in and say, I'm going to cut rates into that, unless you want to be honest with where things are really at, and nobody wants to do that. So I think we continue on like everything's good, we don't have to cut rates. And that's why the Fed always stays too long. They don't want to admit there's a problem. They don't want to admit that what they've done is causing problems, right? Until they have to. And that's what you get. And that's kind of human nature.
And it's also, if you think about it, it's their currency. It's their, it's their only control is to be able to govern interest rates. And so once they pushed them up to a certain amount, they don't want to give that necessarily away. Although, the interest on the debt is just getting to be,
now the only wild cards in this are international type things. Yeah. If China moves on Taiwan, that's going to blow everything up. All bets are off at that point, because who knows what's going to happen? That's uncertainty, right? We just had a number of elections out of Europe last night. You don't see them affecting the markets today, but it's definitely a big swing in a different direction for Europe. France may have a whole new government. Italy, Belgium lost their current, the leadership that's been in place. And so there's a lot of that happening. In fact, I heard, I don't know exactly what it was, but it's roughly that there's more elections happening this year across the world than at any other time in history. Potential changing of the guard, if you will.
Are most of these moving off to the right?
They are. Yeah, France last night was a huge move away from Macron to the more right side of things. Same with Le Pen, right? It was, I think, biggest landslide win for the Le Pen group ever. Mm-hmm. He actually dissolved government overnight, and they're doing another election in 2 weeks or something. And then same in Brussels and in Belgium, same in Italy and some of these other places. So there's definitely that pendulum swing back. A lot of the stuff over there is driven by some of the a lot of what's happened with the mass immigration and stuff that's been allowed to come into their countries and stuff. That seems to be one of the big issues. We don't know what we don't know what that's like here, do we?
Well, I wonder if that guy in I don't know his name, but the fellow in Argentina that was recently
Milei.
Yeah,
he's cut government by over 50%.
Right, he's completely flipped around the.
Their currency is as strong as it's ever been, and their economy's hot and everything. There's a lot of good lessons out there about what is really needed to run things and stuff, and we'll see what transpires here. That should bode well for Trump, based upon where the trend across the world is going. Kind of saw this with Brexit originally, ahead of Trump last time. Mm-hmm. We'll see though. There's so much. He could be in jail coming up here in a month. So who knows? Who knows what's going to happen in the end with that, right? So that's why I said I think the fall is going to be the market's going to be trading on every news thing, and this is happening and that. You know what I mean? So. And then after the market, we'll get that sigh of relief, certainty, whatever it is, and then you'll get your rally, and then 2025 is going to be rough.
Yep. Hey, is there any, if there's anybody that's joining us here live, if you have any questions, if there's anything that you want to post for myself or Dave, please let us know. Just chat into the chat room. Or if you're watching this on a replay, which is what most of you will be doing, go ahead and email us at support@12minutetrading.com
Yeah.
if you have any questions for. Now, I think next week, are we going to be able to do one next week?
We will be able to do one next week. Yes. So then we've got our mastermind meeting end of the week and everything. Got our in-person mastermind for the summer. It's gonna be a lot of fun. What else can we look at today? Oh, how's Roaring Kitty doing today?
That was the most bizarre thing that I think. I can't believe I wasted time on that on Friday.
It's down another. You actually watched it, did you? Good for you.
I didn't.
did not.
I was not there on time. I just thought what I did was I just hit the notification bell on that, and I tuned into it later. And apparently he was half an hour late to begin with, and it was the most bizarre thing because he gets on and he's like he's playing a video game. He doesn't even know that he's live, or at least that's what we're meant to think. Or he was
wanting people to think that. Yeah,
that's what we're meant to think.
Well, it's down another $4 and change. So I think his calls are at $20. So we'll see. But I did see somebody bought $100 calls out to August. Somebody put in a big order on, which I don't know if what they're paying or what they're costing, but somebody today did that. So either somebody knows that the mother of all short squeezes is coming, or they're just shot in the dark, pennies for $100 calls that can turn into $10 if they're right, type thing. So,
hey, I got a question here coming in from Brewhead,
yeah.
And he wants to talk about campaign diagonal. So what I'm going to do is I'm going to bring up the option chain for that. So let's see. This morning, what did we do? We can do XSP here. And so the answer depends on which option that you're looking at. So his question is, when rolling a put in a campaign, is it correct that the roll credit is better when the underlying is up? The easiest way to understand this is really to break it up, right? So this morning, what we did was we put on, let's see, I want to look at this here, XSP. Bear with me a second here. I got a lot of trades. Okay, so we bought to cover and then we sold short. Bought to open. Okay. So we did the 530. No, I don't know which ones I did. Hang on a second here. Okay, we did the 533. Okay, so 533, we sold the 533, and we sold that for $1.25. And right now, you can see that the price right now is 25 by 28. So what you want for the short option is you want it to go higher. So that makes the short option happy. But then when you look at the long option, if we go all the way out to our 19 July long option, we did the 531s. And we bought the 531s, and we bought them for, what did we buy them for? 571. And so these are down almost $100, which is normal. I mean, if you've got a move, which is, a strong move, and we basically got these around the lows of the day, which is sort of what you want. So in terms of your question about the rolls, the short put credits are larger when the underlying is rising. A lot of that depends on where the price is. So what I will do is I will pick for the short options. So if I'm looking at, let's look at tomorrow's, say for instance, and that's 12 July. Hang on a second here. Let's look at 12 June. Okay, so here's tomorrow's, and currently the price is 535.76. So you can do this a couple of different ways, Brewhead. You can either say, I want to pick the option that is closest to at the money. So in that case, it would be the 536. But typically what I'm doing is I'm picking the option which is the first strike out of the money. As far as it's still a 44 delta. So I'm picking the first strike out of the money. However, you could be more aggressive and you could sell actually in the money if you were convinced that the price is heading higher. Which I never assume anything about which way the price is going. I always do the same thing. So if the credit that you're seeing, if the price was 535.1, and if I did the 535, I'd be getting a really big credit. On the other hand, if the price was 535.9 and I'm still selling the same one here, 535, it's not going to be as much. It's probably going to be about $1 for most days when we're doing one DTE. So it depends. I think it depends on what you want to do. But if you want to tighten it up, you can sell the nearest option to the money if you want. In which case, at 539.79, you'd be picking the 536.
Well, another thing, Doc, for you to maybe add here, or give some color on. I've done it. I would say I've had probably 50-50 success with it, is double dipping. So like on a day like today, when already that short put is already like 20 cents, you could move it up for tomorrow to that 535 or 536, and get yourself another buck or so, or 75, 80 cents. Stay in the same cycle, for the next day even, and do that. The only issue is obviously if you drop it open tomorrow, now you're kind of stuck in it, right?
Yeah, right. Now you're right back.
So
you haven't really helped yourself at all.
Yeah, that's why, letting it go and then doing it the next day after open is like probably the cleanest way. I don't know. What are your thoughts on that, Doc, from what you've seen? Mine's kind of anecdotal. I've only done it a few times.
When it works, like when you get a linear move that just gaps and goes every day, then being able to, so what Dave is talking about is we sold the 533 this morning, and let's see, what did we get? We got $1.25 for it. So now we've gained almost $1 on these. And so we could buy these back for, say, 26, 27 cents, and then we could resell either the 535
or by one day. I think you need to be on the 11th cycle, not the 12th.
This is the 11th.
Oh, it is. Oh, sorry. Okay.
So we could resell for tomorrow once again, and we could still maybe get somewhere in between. So this is the problem that you run into, is that you almost have to go in the money if you're going to do it this late in the day, which is aggressive, right? So if you will be rewarded if the price continues to go higher like this, and you will be punished if the price reverts back at the same time that you normally roll these. And so what you're left doing is, well, I can't roll it right now. I'm going to wait and see if we get a bounce later on today. And it doesn't really help people, because they want something that's mechanical, and they want something that's, basically every day it's doing the same kind of thing. So that's our preference for doing this. But I think the most important thing is for people to really learn and understand what makes this strategy tick, and then they can run off and do it on their own in whatever way it works best for them.
Yeah, I mean, reading what Brew had said, he's just noticing that the credit seems larger when the underlying is rising. I don't know about that. I would think if the XSP is falling to start the day, you need a little more volatility. Your credit would be a little bit higher, but maybe.
Well, yeah, and I'm not sure if he's talking about we set up these trades for a debit. So the net, when we buy long and sell a short against that, that's a net debit. And then we buy it back the next day for a credit, or we sell it for a credit the next morning. And so I'm not sure
if you're selling against it to the point where you're over break even, and then it's just like found money, as much as you can make after that. Right.
So I think our disconnect here is more semantics than anything else. Because that's why I like to break down the trades in the room, to, instead of saying, hey, here's a diagonal that we just did, because that doesn't mean anything to people. But if I say, hey, we bought this one and we sold this one, now you have all the pieces and parts, and you can duplicate the trade regardless of whatever platform that you got. Any other questions from anybody else on anything else in the market? it's continuing to be strong today, and
Yeah, it's coming
we're
up a little bit.
fairly close to the intraday highs as well too. So
We'll see how we finish out. This could be one of those. I think there's definitely is a waiting period. It's waiting game until Wednesday morning and afternoon. You could see it sell off into close as people are maybe just day trading and taking profits today. Some big boys. We'll just see if it sells off into close some and goes back to even. I don't know if we'll go negative, but we'll see. But again, the bias is upward. The trend is upward. The longer term trend. Again, you watch those moving averages in the charts. As long as we're above those, we continue to go up above those. We just bumped up against the upper Bollinger Band at the end of last week, so we're hitting a little bit of that resistance you typically get. We're going sideways, and I think you're looking for that catalyst on Wednesday to be that bounce back up. Like I said, I think we easily could see 5,400 on the S&P by the end of this week.
and don't forget what happened the last time that we had a Fed meeting, which was this day here.
Mm-hmm.
And I don't remember what type of candle that is. That's a shooting star if it's up at the top. With it, when it's at the bottom, I'm not sure what you call that. But we had the next day reversal. So that you couldn't create a more bearish looking candlestick than that. Like, we rejected at the 50-day moving average. This market's toast. The Fed is hawkish. Everything looks bad. So we ended that day, the last Fed day, I mean, very, very glum. And then next day, rip, and just bent them over backwards. So, could we get the same kind of thing where the day after the Fed, which we're talking about Thursday in this case, would be the reversal day. So whatever the Fed does on Wednesday, whatever the market does to the Fed, we get a reversal on Thursday of that action.
Yeah, actually, that's why I told all my students I'm not trading until Friday afternoon this week. By then, we'll know which way it's going and what the trend's going to be, and then just take advantage of it. It's not even worth it. Why mess around?
Yep. I think that is wise. All right, guys. I think we're just about out of time here, and I don't see any other questions. So thanks, everybody, for joining us, and we'll be back next Monday before Dave and I both go on the road. So there we go. All right. Have a great day. Have a great week. We'll see you guys. Thanks for joining us.
Yep.